Almost everyone thinks they understand crypto. They don't. Not even the successful ones. Because what you're seeing today, fake coins, manipulated charts, overnight crashes, didn't start with Bitcoin. It started over 20 years ago with gold, with software. And one simple discovery, you don't need a real market to make real money. Back in 2004, my partner John Weising and I ran a finance company in China. The economy was booming. People already had houses, cars, savings. So we asked one question, what comes after wealth? Our answer was an industry. It was behavior, speculation, gambling, addiction. And one asset stood out immediately. Gold at the time. China had only about 600 tons of gold reserves. That's less than 1 gram per person. And the price hadn't moved in 25 years. To us, it was obvious this wasn't stability. This was pressure building. We started looking for real investment gold bars, high purity, standard weight, easy to trade. But instead, we discovered something much more powerful, electronic trading platforms. A Hong Kong veteran introduced us to paper gold systems. So we bought the software, hired students in Chengdu, and built our own platform. It connected to real-time data from Bloomberg and Reuters. Prices were real. Charts were real. Everything looked real. Now imagine this. 2 guys in the middle of nowhere open a stock exchange. They stream real prices from Shanghai. People deposit money, start trading. It feels legit, but there's one problem. The trades never actually happen. At first, we tried to hedge. We tried to do it properly. Then we realized something shocking. You don't need to hedge because winners don't withdraw. They want more. Losers don't. Complain. They disappear. And with enough people inside the system, it becomes a closed loop, a perfect casino. The house quietly takes around 40% every year, with almost no risk. Eventually, Zhang and I split. I wanted something real. Physical gold, real buyback. He chose something else. Easy money. By 2008, he was holding nearly 10 billion RMB in customer funds. He took it to Hong Kong, used massive leverage, bet against the global gold market. Then came the black swan. War broke out. Markets moved the wrong way. Gold didn't rise. It collapsed. He lost everything. At one point, he was standing on top of a building, ready to jump. But the story didn't end there. His system survived. Hundreds of agents copied the model, cloned the software, built their own platforms, and the game went underground. Then came the next phase, P2P lending, internet finance, and finally crypto. But not real crypto, fake coins. These platforms claim to be blockchain, but everything runs on a central server. The operators see every trade. When too many people go long, the price drops. When too many go short, it pumps. Real Bitcoin. Decentralized, hard to control. These platforms completely control. Same system, same psychology. Winners stay. Losers leave. The house wins. Again, not all finance is fake. Real markets, gold, oil, regulated exchanges follow probability. But platforms with celebrity endorsements, centralized control, and extreme leverage run because you're not investing. You are the product. Stay sharp. Protect your money. Understand the game.